So this is actually our first ever Mining Insights speaker series. SKF developed the series to help mining industry professionals like yourselves gain insights into overcoming the kinds of challenges that you typically face every day. Now throughout the expo we'll be featuring a diverse range of experts from across the world of mining, and they'll be presenting real case studies. They'll also talk about industry trends, technologies, techniques for improving reliability, productivity and safety within the industry, and also much more beyond that. We hope that hearing their presentations will help you also in your quest to do the same. And with that, I'm proud to present our first speaker, who will be covering the mining industry business outlook. She's an editor at mining.com, one of the top websites covering the industry. She's an expert on mining rights, socio-political issues affecting the mining sector specifically. And she's also been interviewed many times by CBC and the BBC. So please, can you put your hands together and welcome Cecilia Jamasmie.
Thank you.
Good morning. Cecilia.
Thank you, John.
Thank you.
Good morning, everyone. Thank you for being here today. Before I go into my presentation, I just want to add a few lines about myself and the website I write for and I'm an editor of. Well, I'm an international journalist. I'm originally from Chile, and I moved to Canada about 15 years ago. And right now, I'm one of the editors of mining.com. It's the leading digital publication on the mining industry. We offer free information. You can subscribe to any particular topic. We send every day emails about general mining news, but we also have a specific news about gold, iron ore, coal, you name it, diamonds. So it's really a great source of information. We are a daily new online newspaper, and we cover Monday to Sunday, so no rest for the poor. And about myself, I have a master's in journalism from the University of British Columbia, that is in Vancouver, and I've been covering mining for the last 10 years. So I'm not an analyst. I don't have any investments in mining, or I don't buy gold or any commodities. So what you're going to hear from me is the most neutral opinion that you can hear from someone who just covers the industry. So with all that, let's start. So everyone has been looking at what happened this year. The year 2016 for commodities started with a bang. Commodities were soaring. They were quickly entering in what is called a bull market territory. For those of you that might not be familiar with the term bull market, is when a commodity gains more than 20% in price, and most of them were doing so. So many people were wondering, well, is this it? Is the bottom already there, and now we're picking up, we're going in the up cycle? Many jumped to conclusions a little bit too quick, and we'll get to that in a second. But let's say that at least from January to June, things were looking excellent, and really many miners restarted projects that had been put in the back burner. And we also saw a bunch of acquisitions and mergers, particularly in the gold sector. So let's look first how copper did. Why copper? Because copper, as you know, is normally looked as a bellwether for the mining sector because of the widespread uses, not just in mining, but construction and electrics and semiconductors and you name it. So normally, people look at copper as a barometer of the thermometer of how the industry and the global economy is doing. And copper was doing fantastic. People, especially in Chile, right? They were very happy because copper was picking up, and Chinese demand, the main consumer of copper, was at all-time high in 10 years. The highest demand was the first 3 months of this year. So, of course, copper prices were doing well. But unfortunately, that didn't last that long. And in about March, started going down again, and ever since it's been struggling at around $2 per pound, which is not enough for a lot of producers, most producers need a price of 2.5 to start making some sort of profit or be at least break even. So not good for copper. But gold has a golden year. It has the best first 6 months of the year, the best since 1979. It really, really gained in the first 6 months of the year, and that's why you saw lots of projects from gold mining companies restart in the first 6 months of the year, and also we saw a lot of mergers and acquisitions, particularly in Australia, where there's a lot of small gold miners. So they took advantage of this rally, but if gold was doing well, silver was shining even brighter because, well, two main reasons. One reason is when investors flock to precious metals, particularly gold, normally they also buy silver. But silver had a spike by itself because a lot of people are investing in silver right now. If you ask analysts, they say that the main reason is because of technology. Every flat screen, every light switch nowadays contains silver, and the bet is that with the use of more renewable energy, silver demand will continue to pick up in the coming years. So as you can see in the graphic, for the first time in about 12 to 18 months, silver actually outpassed gold. But then we came to June, and everyone was happy, celebrating, hooray, let's restart projects, and Britain decided to leave the EU. So all the commodities went down again. Well, most of them, not all of them, don't quote me on that. They reverse gain. They lost all the gains they have done in the first 6 months. They went back to, like, in terms of spot price, they went back to 2009 prices. That's how bad it was in 2 weeks, or less than that. But even though commodities led by oil went down, precious metals, on the other hand, went up because when there's uncertainty in the market, investors tend to flock to safe havens, and gold is seen as the icon of the safe havens, right? So precious metals were actually, they benefited from Brexit. Here we see what happened with oil very clearly. That's June, and it kept going. Iron ore, another commodity. Well, let me expand a bit on iron ore. In January, since say November last year to January this year, all analysts, even miners that are like BHP and Rio Tinto, producers, Vale, that I've interviewed, they were saying iron ore prices, they are just going down. That's the only way they're going to go down because of oversupply, because low demand. But iron ore has been a surprise this year, together with coal, but we'll get to that later. Iron ore defied all expectations and began the year almost as good as gold, like going up and up and up, breaking records in prices until June. And it went down, but not only because of, obviously, Brexit, but because of the correction in the market, and also a couple of big mines began production. So they added a lot of tons into the global market, and of course that affected prices. So where are we now? After all that, the way up, the way down, where are we now? Current prices are still too low for those miners and companies who have high costs. So companies in general are still in cost-saving mode. When it comes, for instance, to suppliers especially, you more than ever, anybody, can say that the sales are not picking up just yet. Mining companies are trying to do the most with what they have right now. If anything, they're buying spare parts, or they are trying to extend the life of the equipment they have right now. But new equipment sales is still record low. I was just talking to Caterpillar over the weekend. They say that their sales are 15 to 20% lower than it was in 2012. So not there yet. not there yet. And the bad news is that big miners such as Rio Tinto, a BHP, number 1 and number 2 in the world, they predict that prices will soften even more because of the large stockpiles in all sorts of commodities, particularly copper and iron ore. So there's a bunch of graphics that I want to show you right now that it really tells a lot and shows you how bad the downturn in the mining industry was. If you see the blue line, that's the price that was predicted in January 2015. The yellow line shows the price that was forecast for the same commodity in April this year. So you see that after everything that happened last year, the new forecast price is a lot lower. And the worst news of all is that these two curves are not expected to meet each other until another 10 more years. In the case of coal, maybe even more. However, I have to say that I do feel that this graphic will have to change really quickly because coal has been another surprise this year. Prices are soaring. They are up more than 130%. Just today, coal, metallurgical coal, the steel-making kind, was trading at $204 per ton. So that's prices unheard of, and many coal miners are smiling out there because of that. So if you ask me, I think that gap will be a lot shorter than what it shows right now because of the latest news. Well, copper, same thing. And if you're interested, I can explain you a little bit more about copper later. But even though it's pretty low, there's many actors out there that are investing in copper and they're putting all their eggs in the copper basket. So prices are supposed to recover to the point to where predicted last year sooner than expected, so before 2025. Nickel was another surprise. It was falling alongside with copper, but then in Philippines, now in August, Philippines is the main provider of nickel to China, which is the main consumer. So they ordered all the nickel mines to stop because of environmental concerns. And right now, the government is analyzing a permanent ban on those mines. So if that happens, China will still need a lot of nickel, and prices will go up. The offer and demand laws. So that was a surprise too. So that's another graphic that I think it will change. If you ask me now, that's April 2016. If you have to do it now, probably will be a lot faster than that. Iron ore, it's been up and down, up and down. And right now it's holding on about 50 and 50 something per ton. But unfortunately, there's about 3 huge mines starting in the next 3 to 4 months. Anglo America has Minas Rio in Brazil. Vale, the main producer, also has S11D, a massive iron ore mine that is starting as well. And one not that big, but important enough, Roy Hill in Australia, also starting up. So we have 3 major mines beginning to produce in the next 3 to 4 months, and you know what happens when there's too much supply, so we'll see. And gold. Well, gold started the year like a rocket, then stabilized a bit, and since late August, it's been losing part of the gains that it had in the first half of the year and July. Mostly because investors had been flocking to other sort of assets and leaving ETFs and gold-backed investments. So they slowed down a bit. At the beginning of the year, they were like buying a lot. They have slowed down a bit. Oop. So if miners have seen recovery in the sense that they have used a bit of this, the money they're getting from the rally of the commodities, the extra leeway, they're paying their debts, the huge debts they accumulated last year. But suppliers and equipment makers and service providers, they still have not seen much improvement. There's a lot of equipment sitting in in waterhouses, and this tells a lot. The US-based, the Parker Bay Company, they produce an index, and they recently disclosed this graphic that shows surface mining equipment demand is at a 10-year low. It's never been this low in the last 10 years. And I can only imagine that for underground mining is about the same, particularly because coal, one of the most depressed industries, is mostly underground as well. So that tells you a lot. There we go. And because of that, there's been a lot of changes in this particular sector. I think one of the main changes was the recent acquisition of Japanese Komatsu over Joy Global. That gave will give Komatsu a very important stake in the North American market. They used to be big only in, of course, Asia, Europe, and South America. Now they're arriving, with the acquisition, they're arriving here in North America, which could be a threat for Caterpillar as the #1 equipment maker, particularly because Caterpillar, at the time that Komatsu is coming here and with Joy Global is expanding into underground mining, Caterpillar is giving up in a few small business sections, but still important sections of the underground mining business. So there's the question out there, what's going to happen? What's going to happen, especially in the underground mining business? Maybe we'll see a switch in #1 and #2. I can tell you more about it later if you are interested. So what can we expect for the next 3 months and maybe up to January next year? What can we be looking for as clues in terms of what to expect and how to plan your business? And I would say there are 4 important issues to keep an eye on. One would be the oil supply. The second would be Chinese growth. Then the the Fed rates, the interest rates. And finally, but not the less important, the US presidential elections. And before I go there, I have to say that when I said that 2016 began with a bang, analysts are now saying that will end with a whimper. Commodities have been losing steadily their gains in the last 6 months, and precious metals, though they remain strong, and uncertainty that the US presidential election can bring might keep it strong. But let's get there when we get there. Let's go with oil first. So when I made this presentation more than a month ago, I had to change this slide because the International Energy Agency had said in July that oversupply in the oil market was done, and we were going to see an improvement, a considerable improvement, beginning December this year. Well, 2 weeks ago, they changed their mind. Well, they changed their outlook, let's say, and now they're saying that there's at least another full year of low prices, so they expect oversupply to continue depressing prices until at least November 2017. China growth. Well, China growth is very difficult to read for many reasons. The main reason is official figures not always actually coincide with figures that private investors or Bloomberg or other analysts they keep on the Chinese market. It's really hard to say which is the right figure. However, we know that the official indicators, at least, they give little hope. The activity in the property sector is still at 10 years low, according to the latest figures. And, construction as in space used for building. So that means China won't be buying a lot of materials for construction, so copper, nickel, aluminum, iron ore, you name it. However, and now comes the good news, analysts such as Moody Investors Services, they are saying that even though China growth is difficult to read and they may not be buying much of these commodities, these base metals cannot go lower. they called the bottom of the commodity, the prices for these commodities about 2 months ago. They said that if anything, they'll remain that low, but they won't go lower. So it's not too bad of news, although never good when it stays low, right? At least not for miners. And the US federal rates. Last Thursday, everyone thought that the Fed was going to hike the rates. And to the surprise of those who followed this news, particularly myself, they didn't. However, they did recognize that all the clues are there in the market. So it's highly likely they will do that now in December when they meet again. So these are bad news for gold, because every time the interest rate go up, that affects the gold price. Why? Investors, gold doesn't give you any interest. So if the interests are high, they will turn their money and go somewhere else, other assets, other sorts of investment that actually give them interest. So that affects the price of gold. And also, high interest boosts the price of the US dollar, which means in countries where the currency is depressed, other markets, becomes an incentive to sell gold because you get a lot of more dollars per gold that you used to get before when the dollar was low, exactly. So you have two main reasons why people may start selling gold like crazy, and that will affect prices. So according to BMI Research, it's a division of Fitch, they're expecting that the price of gold will be about $1,300 by the end of this year, and depending on several issues, particularly the U.S. election, it could reach about 100 more, so about 1,500 by the end of 2020. That's what they say. And the elections. So the coming presidential election may prove to be the main driver for many commodity prices, particularly gold. Both sides, if they agree on something, is that gold price will go up no matter who of these two win. However, the spike will be a lot bigger if one of them wins than the other one. Reason being, analysts believe that if Donald Trump wins, uncertainty and worries will be a lot more than if Hillary Clinton wins. Therefore, they expect the price of the dollar to gain at least $300. That's right, at least 300 if Donald Trump wins comparing to Clinton. So gold will go up no matter who wins, but if it's Trump, it will be a lot higher. Not exactly for great reasons, mostly uncertainty and doubts and worries. In terms of other commodities, particularly coal, I'm talking about coal because we're talking about the US and coal is very important in this market. They'll continue to go down, that's what they predict, no matter who wins. Although, if Donald Trump wins, there's an expectation there that he may reverse many of the legislations and measures taken by Obama that has depressed a bit of the coal industry. So they expect that he may, especially everything that is related to clean energy and reduce emissions, so they expect that that would be a boost for the depressed coal sector if that happens. So what can we expect for next year? The mining industry will continue to see volatility. Commodities such as gold, uranium, and lithium, the white gold, they will experience growth. There's also hope in copper, not in the short term, but in the very long term, 2-3 years. And in terms of equipment, analysts expect acquisitions similar to Komatsu Joy to continue to happen this year, whereas mining companies will continue to get rid of commodities and business that are not core for them and focus in just a very few commodities each. And if I have to say something that I think is a good thing to take away from this presentation is that it's not that important to predict the future or to know exactly where prices are going. What is important is to prepare for every possible scenario. And that's where most mining companies have failed in the last years. They have stick with one vision and plan for that, and then reality was different. So plan for everything, and hopefully this presentation was helpful in that sense. Thank you very much.
Very good. Yes, please put your hands together for Cecilia.
Yeah.
Thank you, from mining.com. I think a couple of questions from our perspective, just listening to the presentations there, Cecilia. Firstly, could you elaborate a little more on the machinery manufacturers, I guess in terms of their outlook?
Well, thank you for your question. It's very interesting to see. I was just with Caterpillar over the Friday and Saturday talking about all this, and they do see green shoots out there. They believe that demand will pick up at one point, but not for equipment, but pieces. That's what I was saying at the beginning of the presentation. They believe that miners continue to work under high pressure to keep costs down, and if anything, they are just trying to extend the life of the equipment they have right now. So for pieces and parts and services, yes, they expect growth next year, but that's about it. Forget about new equipment or new projects or anything like that. In terms of how the market is shaping up, I did ask about why Caterpillar is giving up on room and pillar. Because for many people, in their mind, that meant that Caterpillar was giving up in underground mining. Well, the answer I got is that they're not giving up in underground mining. They're giving up in a technology that Caterpillar believes is obsolete and that will die. So they're giving up on that particular. They believe that longwall mining for underground will continue to grow strong. So they don't feel that the acquisition of Joy by Komatsu will affect their position in the mining sector or in the underground mining sector in particular. So I don't know if that answers your question. Yeah?
Very good, thank you. Secondly, do you see any particular commodity where you would expect more growth and focus? I know we've talked about international scenarios of economy and political grounds, but just generally, is there a particular sector where we could anticipate growth in the near future, for example?
Well, definitely we are already seeing growth in the gold sector. As I said, the commodity prices have helped miners to pay down a lot of the debt they have accumulated, and they are restarting projects, mergers and acquisitions in Australia, but also South America. We've seen at least a couple of big projects restarting as well. Even if the price of gold takes another dip, still good enough for them to keep resuming that. So that's one sector, the gold industry. And copper, actually, it's interesting because if you look at copper prices right now, they are depressed, they're down, and if you look at the short term, it seems like a bad investment. But if you look at what Rio Tinto, the number 2 mining company in the world, is doing, and Caterpillar itself, the number 1 equipment maker, they're investing lots of money and putting a lot of effort towards the copper sector because they do believe it will pick up and that sector will experience a lot of growth, not next year, but probably we'll see that in about 18 to 20 months to start picking up. So they're thinking about the long term. If you ask me short term, not copper yet.
Okay, Cecilia Jamasmie from mine.com. Thank you very much. Thank you.
Thank you.
Thank you.